So this week with the elections around, there is nothing else that we can talk about but our expectations from the elections. Recently we've seen the market to be extremely shaky. The VIX index, which represents the volatility in the market, has risen sharply. It is up to the highest level in the last couple of years, and we are seeing a lot of wild movement happen in the market. One day you see PSU stocks rise, and other day they get battered. So around the elections is the time when you see the highest sort of volatility. So with this huge event in mind, I think there is nothing else on investors' mind what's going to happen on June 4th and how it impacts our investments. Obviously, we are not political experts. We cannot tell you who wins or doesn't win, but definitely we have a few scenarios in place, and we would talk about how the market could react in different political scenarios. So there are three scenarios that could happen. In the first scenario, where the same government comes back to power with a clear majority, I think that the market is going to have a positive reaction, is because market right now is pricing in the same scenario. Everybody, based on the opinion polls and the previous state elections, has built in that expectation that the same government is going to come into power, and obviously continuance of the same policies would lead to a boost in the market, because previously we've seen the same government lead to stronger markets. Now, if the same government comes into power, which sectors could gain? So number one would be the infrastructure segment. The current government seems to have a big focus on the infrastructure spending, and you could see sectors like defense, power finance, railways see an upsurge, and that would be one expectation from this. Number two would be the energy segment. The current government seems to have strong policies in the power segment, strong policies in the electric vehicles, renewables, and number three, financial services. The current government seems to have a strong focus on working on improving the financial situation of the banks and the NBFCs, especially the PSU banks could have a strong reaction on the positive side if the same majority is formed. Now the second scenario is where there is a clear shift of the government policies, that instead of the NDA, the India bloc gets a majority. If something like that happens, the market would speculate on how the shift is going to happen. People expect there could be a correction because there's a clear shift of policies, but we expect that correction to be short term in nature because the country will have political stability. In terms of segments that could gain in that scenario, we think that would be up to the policies for the new government. Irrespective of that, the IT segment, where the government could have a focus, especially on the renewable side, could get a lot of boost. The pharma segment, which tends to be stable through any turmoil, and where we think a welfare focused government would do well. The rural segment, where you will see the FMCG goods and a few rural focused companies could get a boost because the India bloc seems to have a focus on welfare spending. So these segments, IT, pharma and the rural sector, could get a boost if a shift in government could happen. Now the third scenario would be the most difficult scenario, which is when there is no clear majority, right? Nobody gets a clear consensus, and that would lead to longer term volatility and a longer term turmoil in the market. Nobody knows where the majority is going for, let's say, a week or so, and that would lead to a lot of stress in the market. In that scenario, where should our bets go? We would have to focus on those sectors that tend to be stable across all cycles. So for example, consumer sector is not going anywhere. Whenever there's volatility, people jump into FMCG companies, so that is the sector that would do well. Secondly, utilities will be needed in any market scenario, so utility companies would get some push. And thirdly, we can just go and buy gold, right? Gold is the favorite of a risk-averse investor. It will do well when there is crisis. So gold would be another thing to bet on if there is no clear coalition. Now, obviously, with all of these scenarios in place, there are bigger concerns at play. Whatever happens with the elections, the broader market direction will be driven by the global markets. So the global markets, what's happening in terms of inflation, the direction of the bull market in the global scenario, as well as the war impact in the geopolitics would have a concern, and they would always govern the market direction. The election results, until unless there is a big crisis in the political scenario, would lead to only short-term jitters or short-term rally before the market finds its space. Now, another thing that could impact our analysis would be sentiments. Markets are driven by sentiment, and while you might see a clear indication of one sector or another, the broader sentiment could have a role to play. So despite a clear majority being formed on either side, The markets could react based on sentiment and expectations. So that factor you have to consider. Now another thing to consider here and we have to talk about is the growth prospect for the broader economy. Despite whatever happens in the election, the growth rate for the Indian economy would continue to be strong. In terms of GDP, most of the revisions that are happening are on the positive side. Various analysts across the world are rating and re-rating India's growth to be upward, and people expect close to 7.4% growth in the current financial year, a similar high momentum of growth in the subsequent years. Second point would be inflation. The inflation in India has cooled off as per the RBI's expectation. RBI is focused on keeping the financials of the country strong, and inflation is a very positive sign in that direction. The fiscal deficit is under control and the inflation tends to be within control, which is a positive sign for the country. And the third factor is the big factor, which is the rate cuts. The rate cuts are going to define the direction of the market in the broader term. How soon do the rate cut happen in the US and how soon Indian RBI can reciprocate for that would be the big factor. We do expect the rate cuts to come somewhere at the end of this year, but we still have to wait for them. That would be one big factor to watch out for. Now, despite this huge event and big jitter that could happen, there are still various sectors in the economy that could still have a positive impact. So there are sectors that will continue to be positive despite whatever happens. The first sector obviously will be FMCG. FMCG is stable across scenarios. You might see it doing well if there is more welfare spending, but if there is no welfare spending, still FMCG continues to be strong. Secondly, autos, right? Autos in India are seeing such a strong resurgence. Massive buying happening in the private segment. Auto manufacturing, auto ancillaries is really strong. So again, autos would be something that continues to be strong despite any results. Healthcare would be a focus area for any sort of government that comes in. Healthcare would continue to be positive despite any results. We're seeing a resurgence in global manufacturing, global metals. So stocks and sectors linked to that, metals, capital goods, manufacturing would continue to be strong because there is a big boost coming in the global economy. Now, along with it, I think IT hasn't had a good time for a while, but IT would continue on its part despite any sort of government change. Because IT gets most of the business from the global market, and once the global scenario gets clearer, IT will find the direction and it would stay stable despite any sort of reactions in the market. Now, a lot of the market direction will depend on what happens on June 4th. Despite all this, the focus that we are seeing happen and what will continue to be strong are these strong and stable companies. Having a lookout for quality, having a lookout for valuation, and obviously looking out for how the trends are forming with these results would be a focus area. The macro scenario in the country, the GDP growth, the inflation continue to be strong, and that will keep on boosting the Indian markets. So that was our quick analysis on the election scenario. There are three scenarios that could be in place: a stable majority by the current government, a shaky majority, or a shift in government. And in all of these three scenarios, there will be certain stocks and sectors that could shine. But despite everything, the Indian economy would continue to be strong and continue to see the strong growth. So if you liked our analysis on the election scenarios, please do hit the like button, subscribe to our channel, and share it across with your friends. Do write down in the comment section what do you expect from the election results. Do tell us what you would like us to post next. So we'll see you next time after this massive election event has happened. Until then, happy investing.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.